Good evening, ladies and gentlemen. On behalf of MK Global Financial Services, I take the opportunity to welcome you all to Eicher Motors Q1 FY22 earnings call webinar. From management team, we have Mr. Siddharth Lal, MD of Eicher Motors, Mr. Vinod Dhaksari, CEO of Royal Enfield, Mr. Kalishwaran Arunachalam, CFO of Eicher Motors. We thank the management for providing us the opportunity to host the call. We request management for opening remarks, which can be followed by Q&A session. Over to you, sir.
Yeah. Good afternoon, good evening to everybody, and welcome to the Eicher Motors earnings and quarterly call. Before I get into the financials and business update, I just want to, you would have seen the announcement that Vinod Dhaksari has decided to leave Royal Enfield and to start, not to get in, or he's continuing with his own hospital project that he's been working on and his wife has been working on. So I just want to take the opportunity to tell you that Vinod is going to be leaving and this is his last call at Eicher Motors. I want to wish him all the very best and we'll ask him to say a few words after this. I just want to also confirm that B. Govindarajan, who's been with Royal Enfield for over 20 years and who's currently the Chief Operating Officer, will be taking over as Executive Director in charge of all Royal Enfield business after Vinod leaves. So Vinod, would you say a few words first and then we can get on to the business update?
Thank you, Siddharth. I appreciate the kind words. I think it has been a fabulous, though short journey at Royal Enfield. We had many external challenges like COVID and all that. We came through all of that and continued on our path to what we wrote down as RE 2.0 goals, which was to grow significantly outside India, which was to grow significantly in non-motorcycle, it was to substantially expand our digital transformation. All of that we did quite well. And I think the long-term plans of the company are solid. We as a company have always thought very long-term. So I'm super excited about the future of Royal Enfield. It's just that many years ago we moved back to India and we wanted to do something for the society. My wife was running a charitable clinic for quite some time and she was not able to serve the purpose completely because we didn't have a hospital. So we invested what we saved into a hospital, and when we built this thing, she realized that she can't run it herself and it's a not-for-profit hospital. And well, Siddharth, just to correct you, it's not a hospital I built. My new boss will be quite upset. It is something that my wife built and I'm going to be working closely with her in trying to at least bring this not-for-profit hospital to sustainable things, and all your best wishes will certainly be useful.
Yeah, I'd like to, Vinod, thank you very much for all your tremendous contributions at RE, and we will certainly take on from there, and myself and Govind and the team, and we'll make you proud. Moving on to the financials and business update for Eicher Motors Limited. The first quarter of this financial year, like last year, was impacted by the pandemic, with the second wave of COVID running through most of April and May and some parts of June. Our manufacturing and retail operations were affected due to lockdown and other restrictions. We've continued to stay resilient and deliver on all our focus areas, and underscored by our best ever quarterly performance in export markets. We've actually had an absolutely stunning quarter from export perspective. We delivered a very large number of motorcycles across the world, including in the Americas, Europe, Asia. We saw a fourfold increase year on year and around a 28% increase from the previous quarter, that means the quarter ending March 31st. And if you remove COVID comparisons, because they're low base to base, we actually had an 83% increase over Q1 of FY20. So it's still a very large increase from pre-COVID. And of course, even in the domestic market, we had a good growth of 91%, but that was on a very low base of last year. On the VCV side, the trucking industry has witnessed an extremely tough Q1 after a relatively decent performance in Q4 last year. But despite that, VCV registered a year-on-year growth of 167% in domestic market and 189% in international markets, again on a low base of previous year. And overall, as the economy recovers from the second wave, we do foresee the challenges easing out in this quarter already and in H2. The supply of parts and components and the growing pressure of escalating commodity prices continues to be an issue, particularly the semiconductor shortage, which is continuing to affect us across the board. We have lots of action plans for that. We are working steadily towards improving the situation. Our suppliers are working towards that. We have alternate sources also in the works. So there's a lot of action in the works, but that is still one of the bottlenecks because our demand position is strong on motorcycles for sure. And now the supply has to rise up to meet the demand. The financials, the consolidated financials for EML for the first quarter are, we had a revenue of 1,974 crores, which is up 141% from a low base last year. We had an EBITDA of 363 crores against 4 crores last year. And the EBITDA margin was at 18.4%, despite, of course, a much lower volume because of COVID situation, and resulting in a profit after tax of 237 crores this year against a loss last year. So that's our overall background and business update, and let's say the overall update. But now, Vinod, you could maybe give us a full overview of Royal Enfield and its first quarter of this financial year.
Thank you, Siddharth. As far as Royal Enfield is concerned, we sold 122,000 motorcycles, more than double of last year, where we had 58,000 motorcycles. Highest ever exports, as Sid mentioned, in a quarter, increase of more than 400% at 17,500 motorcycles. In India, sales were impacted due to the nationwide lockdown, COVID wave 2 and all. But our market share remained at about 28%, similar to where we were the year before at about 30%. But we significantly enhanced our focus on non-motorcycle business, apparel, accessories, and spares delivered tremendous growth. And we are on track to achieving our objective of increasing the share of non-motorcycle to total revenue to 20%. As Sid mentioned, the international success shows continuous progress on our vision of becoming a global motorcycling brand. We had a fourfold increase in exports year on year, but more than 28% increase sequentially and an 83% increase compared to Q1 of FY20. The solid performance was in Americas is what supported the overall growth, but even in UK, Royal Enfield topped segments for 2 segments for June, both in customs as well as the modern classic, where the Meteor did very well on the custom segment and the Interceptor did very well on the modern classic. We were the top selling motorcycle brand in New Zealand in June, and we are among the top 3 motorcycle brands in mid-size segment in Thailand. As you might have seen in the news, we commenced local assembly operations in Colombia, the 3rd biggest motorcycle market in Latin America, and with a dedicated unit in Antioquia. This is our 2nd CKD plant in international markets after Argentina, and we'll continue to work towards more. But to begin with, the plant will locally assemble the Royal Enfield Himalayan from this month. As far as production is concerned, it was impacted due to the lockdowns and the supply chain disruptions. As you might have heard, the ABS and the semiconductor shortage continue to affect the ramp-up efforts. We're working towards quickly resolving these issues with our partners, and we are also finding some alternate sources. On the retail network, though, we continued our domestic network expansion plan. Over the last 2 years or so, we have more than doubled our network, and we are now more than 2,000 stores. International, we continue to expand in international markets with an addition of 8 exclusive stores and 19 new multi-branded outlets. With this, the total our exclusive stores outside India is 140, and we have 650 multi-branded outlets. In all this, Meteor continues to be a tremendous success. It was launched in US and UK, Europe, Asia Pacific, and LATAM after the successful launch in India last year. It has got great reception and strong Q1 performance across Europe and Americas. It's won almost every award that you can think of, including International Motor Show Award in Indonesia, Motoring World Awards, and Bike India Awards, and so on. And it does deliver on our commitment to grow and expand the size of motorcycles. So we're truly excited because it's not just a motorcycle, but a whole platform that we are launching. And along with this platform, we had for the first time launched it on the Make It Yours digital platform. It was an industry first personalization where people can design their motorcycles and we make it specifically for them. They can design it on their mobile phone and place the order. And complete paradigm shift. Nobody has to go to the stores anymore and so on. So all our 2,000 stores are now MIY enabled, and MIY adoption has the parallel benefit of all the accessory penetration going up significantly. 80% of our bookings now for Meteor, Classic, Himalayan, and Twins are now coming via the MIY. And we're going to upgrade this and take it to the next level in near future with future launches. We slowly started coming back to the rides as we continue to nurture the spirit of pure motorcycling to enable stronger connect between riders and their machines. Royal Enfield got the top 2 places in the inaugural races of the Dirt Track Riders Association in UK, and our first ever half-mile win at American Flat Track in Lima, Ohio, half-mile race. And to encourage more and more enthusiasts from diverse backgrounds to embrace riding, we introduced a second edition of BTR, or Build, Train and Race. This is our women's only racing program in the USA. The market recovery has started well. With the market still recovering from the second wave of pandemic, we foresee the situation with production and supply chain constraints to be slowly coming back. It will persist for a little bit, but it will come back. We continue to be on track with our expansion plans and product-related initiatives. None of our long-term plans got affected by all this pandemic. We continue to work hard at it. In fact, it gave us an opportunity to accelerate several things. We expect the production to scale up and the sales to improve in the second half of the year as the chip situation starts to improve. Over to you, back to you, Siddharth.
Yeah, thanks. Now I'll just give you an update on VECV financial and business performance. The revenue for VECV was 1,639 crores, which is up 156% from a low base last year. The EBITDA was at 18 crores versus a loss of 72 crores last year, resulting in a 1.1% EBITDA margin. And profit after tax, there's a net loss of 72 crores against a loss of 120 crores last year. The total sales were at 5,800 units, up 173% from last year. Of course, the second wave has impacted business a lot at CV. Q1 was challenging. However, with the improvement in COVID situation and the economy looking up, we are certainly seeing an improvement in the entire CV industry and in the CV performance as well. We are expecting that already in Q2 and beyond. We've been working closely with partners and suppliers and customers in various ways, in whether it's in extending warranties for our customers and supporting our dealers and with medical support and financial support. So there's been a lot of work going on to get everyone back on stream. We have had a few very successful product launches in the meanwhile as well. The Eicher Skyline ambulance has come into the market with very good life-saving features, etc. We've also introduced the Eicher Pro 3015 XP, which is India's first 17.5-ton truck, which expands our light and medium duty product range from earlier 15 tons to now 17.5 tons. We also have been doing very well on CNG because the opportunity is very strong in light and medium duty trucks on the CNG side, and because of support from government and very good cost economics. And VCV has really strengthened its position in the CNG segment through a wide range of offerings now. So that's the overview for VCV, for Royal Enfield, and for EML as a whole. Now we're on to the question and answer.
Thank you, Siddharth. We will be opening the Q&A session for participants. Anyone who has a question, please use the raise hand option. Participants request you to limit your questions to 2 per participant. Once the participant is called out, please unmute yourself to ask a question. As the question queue assembles, a couple of questions from my side. Firstly, can you give some color on current production situation? Can you talk of ramp up of production in coming quarters in light of the semiconductor shortages? Media reports today are indicating revised production schedule or target of 650,000 to 690,000 for FY22. My second question is, Mr. Dasari's exit has come as a surprise. Considering various strategic plans, how do you see the smooth transition process? Thank you, sir.
So maybe I'll take this. Sorry, sir, go ahead.
No, you can do that, Kailash, if you're up for it.
On the first question, Raghu, typically we don't give a fully a plan of where do we land on the volume, etc. But having said that, there has been constraints that you have seen on account of COVID and then on account of the chip shortage that has been coming in. You would see there are plans that we're working on to see what are the opportunities on alternate vendors, how the existing vendors can scale up over a period of time. As an output of that, you would see the supplies gradually resuming back and coming back to its original levels. Q3 of last year, you would have already seen we touched a peak of about 80,000 in terms of production. So we are moving in the, there are challenges at this point of time, but we are confident that as the long term, it will get addressed and our plans are intact for the long term. Sid, you may want to add and take up the second question.
Vinod, you could start and then I can take on the rest of the second part of the question.
Well, I mean, as I had said that earlier, we as a company always take long-term decisions and long-term strategic calls. In some cases, we made substantial progress, whether it was international growth or digital transformation or the non-motorcycle portion of the growth. Sid likes to refer to me as a pinch hitter in cricket. So I came and played my Hardik Pandya innings or something like that and got things moving. And I think that COVID was in a way a sort of a blessing, but we were able to accelerate a lot of other things that were otherwise stalled. And now we have a fantastic team. I mean, I was there merely for 2 years. This is a fantastic company who's got an amazing track record of success. And these short-term things like chip shortage and all are not going to burden this company. They have strong plans, a very strong team, an excellent brand, and they'll go forward and make success a habit again.
Yeah, so absolutely. Thanks for that, Vinod. I think in the last couple of years, Vinod has made some absolutely tremendous contributions at Royal Enfield and put us on a very good track. Govindarajan, who's been the CEO for since 2013, is now taking over running of the business at Royal Enfield. And I will, of course, continue to work with him and directly and work on all of our plans in Royal Enfield. So we're very confident of our future, of course, and we wish Vinod all the best.
Thank you, sir. Moving ahead to the question queue. First, we have the first question from Vinay Singh. Vinay, please go ahead.
Hi team, thanks for the opportunity. Best wishes to you, Vinod. It's been a long time since we've been interacting with you. Best wishes for the new venture. I'll go back to the question that Raghu asked. There's a very specific number given in the article today in media that the company is talking about 650, targeting 650 to 690,000 units production this year. Are you denying that? Are you, as per your internal estimate, is it going to be higher than that? Because there's a very specific number given out. So which is why I do appreciate your comment that production will improve from here on. But then how would you look at it in terms of range that is being commented
Vinay, we don't give forward guidances. So whatever you're reading is speculative. It's not come from us. And therefore we deny. I mean, that certainly hasn't come from us directly. I mean, as we see it, we have a strong demand position. We've got an order book. And as you can see, our exports is really flying high, and we've got a lot of export orders as well. So really, it's all about improving our production. And honestly, the one bottleneck, I mean, there will be smaller bottlenecks because it is extremely turbulent times. So it's not business as usual at all in any respect, as you can understand. But the main bottleneck, I would say, to increasing our production is semiconductor shortage. We are working on it on many different fronts. We've got a lot of actions going on in order to improve that position, whether it's with our current suppliers, where there's also traction of improvement by the end of the quarter, perhaps, and certainly in H2. But it's not a straight, let's say, increase. It's more of a step increase that we're going to see over the next many months. And we also been working over the last year, in fact, on alternates as well. So we could see traction there. So we are all hands on deck in getting our production numbers as high as we can at this point.
Thanks for that, Siddharth. My second question is on the gross profit per unit. As per my estimates, it seems like Royal Enfield has posted an all-time high gross profit per unit this quarter. I assume it would have come from combination of factors. So could you talk a little bit about the export number that we are seeing, almost 18,000 a quarter? Is it sustainable? And secondly, linked to that, Vinod talked about accessories reaching 20% of the target. Is that already becoming sizable, that it's contributing to this gross profit? So could you talk a little bit about that? Thanks.
So, Vinay, in terms of gross profit, as you rightly said, it's a combination. So, partially the gross profit has improved on account of international mix being higher, and also on account of model mix that has happened in India. And most importantly, the pricing actions have also started yielding results in terms of at least getting back to a margin trajectory that we wanted to. So it's a combination of all the three. We do see our export business as a sustainable one. The demand has been quite good, and as we move forward, we should see good traction. And on apparel and accessories, the growth has been strong. Post MIY, we have seen our GMA business going up significantly. The long-term targets that we always been discussing about as a range, I think we would be able to achieve that, both on exports and in non-motorcycle.
Great. Thanks for that.
Thank you. Next, we have a question from Jinesh Gandhi. Jinesh, please go ahead.
Thanks, Raghu. So my question pertains to apparels and accessories. So while our target is 20%, where we are currently with respect to those numbers, that's my first question. And second question pertains to the order book, which Siddharth was referring to. So what level of order book we have currently? And lastly, with respect to the new Classic launch, if you can share the timelines, given that it has been getting deferred because of unforeseeable circumstances. Thanks.
Yeah. So Jinesh, unfortunately, I think your questions have got numbers, which typically, as you would know, we don't discuss. But at this point of time, the non-motorcycle business is pretty small in terms of size. But we are seeing significant progress in terms of, let it be the penetration of GMA or the average bill value going up. So we do see that to sustain over a period of time, driven by MIY coupled with the new launches that would come in. We don't talk about our new product launches and calendar. You would hear more about it as you go through the quarter. Sorry, there was one more question. Anything I missed out?
Order book.
Yeah, again, we don't call out specific numbers on order book. We have a healthy order book at this point of time. We would see as to how do we cater that link to production as we move forward to the other quarters.
Okay, thanks.
Thank you. Next, we have a question from Kapil Singh. Please go ahead.
Hi, Vinod. Wonderful initiative. Wish you all the best for the same. May I clarify if the company plans to hire anyone in the CEO position?
We are not hiring anyone in the CEO position. Govind is taking full charge of Royal Enfield business, and I plan to work very closely with Govind on everything, and the same management team continues. So there's no new hires planned at the senior level at Royal Enfield.
Sure.
For the CEO position.
Sure. I have two questions. So firstly, can you please comment on the demand environment currently? Because we are not able to see the real volumes because of these shortages. So where is the underlying level of demand right now? If there were no production constraints, what would you be shipping? So that's the first question. And second is on electrification. How do you think about electrification in your segment in the long run? Is it very far off, or do you think it could happen in next 5-7 years?
So on the demand side, I think it's a mixed bag to comment as to what has caused what. So even as we speak right now, there has been intermittent lockdowns that you're seeing in many states. Karnataka is into a weekend lockdown and a night curfew. Tamil Nadu has got a lockdown after 5 p.m., etc. So I think wherever we have opened, the traction has been good, and it will be linked to production as to how do we cater to the demand as we move forward. On the EV side, from a business strategy perspective, both on the product and business development, we have got our teams in place. Having said that, for the segment that we operate specifically, which is the mid-size, we think it will be a slightly long-term process in terms of when EV would fructify, when the vehicle would be on road. But we are not leaving any stones unturned from our perspective in strategizing and operationalizing our EV business model. Sid, Vinod, if you'd like to add anything.
Yeah, just to reiterate, of course, demand position is continuously improving as the second wave is dying down in the country, in India. And as you've seen in international markets, it's very healthy for us. So again, we can't break out numbers, but it is growing well. We have a strong order book, and and really all focus is on production at this point. I like the way you framed the EV point. You said, is it a long term or 5 to 7 years? I really like that, because those are the kind of timelines we're looking at. It's not, next year or the year after. That's not when things will happen, in our opinion. Of course, there will be products, there will be ups and downs, there will be some headway here and there. But we are really focused on the long term, and that's 5 to 7 years and beyond. We've taken the opportunity to take many steps back to look at a clean sheet of paper, and we've been doing that for 3 years. We've got a very good team, capable EV team, working on the consumer side, working on the technology side, working on the business side. And we're really confident of our approach to EV. Having said that, we are extremely deliberate. As you've seen in the last many years, it's not the number of launches which is as important as the quality of the motorcycles and the precision of the motorcycle in terms of being able to penetrate the market and to take share. And to grow the market in our case, because in India, we are not really taking share much from people, we're just growing the market. So even in EV, that's very much the approach, which is that we're forming the product strategy, the game plan. We're working on technology. We're putting all those things together. It will be a few years before you see anything from us, but that's because it's a very deliberate plan. Because when we do come with the motorcycles at the right time, because I think you also insinuated that the market is not really ready in India for sure from a price value equation. Currently, it's way off. An equivalent EV is maybe still double the price if you were to be if you were to sell it with any margin than an equivalent petrol bike. So it's really not the right time to make a big entry into the market, just because the economics don't work for consumers, even with all the benefits and other things. So we will hopefully time it right so that we're not in a position where we have to lose too much money or anything of the sort. But we're working tremendously on EV. We're extremely bullish about our own EV strategies, but it is in the 5 to 7 year horizon where a lot more will happen in Royal Enfield on the EV front.
Thank you. Great answer. Thank you.
Next we have Venugopal Gare. Please go ahead.
Hi, thanks a lot. Firstly, best of luck, Vinod, for your new initiative. I have just two small questions. One is on the product launch cycle. Now, given the challenges you're seeing on the supply side, the last launch for us was probably around 11 months back. So I'm assuming that given that you had a fairly healthy pipeline, two things might be happening. One is bunching up of products. I'm assuming you would want to still keep some gap between two launches. And number two is with the shortages on the supply side, how does it sort of alter your next launch or the launch which is probably imminent? That's the first question.
Yeah, there is, of course, that issue. I mean, if you're not able to produce enough, you can't really launch a product. You need enough stock to launch a new product, because in our case now, we've seen that there's enormous demand in the early stages, and if you can't fulfill that, it really sort of it could even have detrimental effects on the new product. So, but that's only a couple of months here and there. It's not the biggest issue. We want to make sure that we do it right. So that's the approach you've seen from Royal Enfield in the last many years. That no shortcuts, do it absolutely right, and we believe that's really helping us in every single way possible. There will be some bunching up, but we are well aware of that. I mean, there will be some pushback and other such things, but really, I think as we hopefully, if there's no other major situation, as we move forward in the next few months, the supply side, as you talked about, will also certainly improve, and then our product cycle should get back on track. There is no question, because of the severe lockdowns that we faced also in the last few months, that there has been some pushback by a few months, but it's only a couple of months at most in most cases for a new product.
Thanks, Siddharth. The second question is, see the chip shortage part. Sorry for asking this again, but is it worsening compared to what it was earlier? Because it's not related just to you. We understand that other auto companies are also have been highlighting that fairly vocally for a long period of time now. So is it worsening compared to earlier? And number two is, when I speak to semiconductor companies, which we have done over the past few months as well, they do indicate that usually auto companies do get an advance alert, because it takes about a few months of production cycle, for the product to come out. So in that sense, what you're seeing today, does it really surprise you in terms of the shortage that you're getting hit right now?
Well, the thing is, it's very turbulent, because there's things have been evolving a lot. So while some parts of the supply chain have improved, other parts, and this is for chips, unfortunately, this is not at all under our control. It's not even in India. We were reviewing it recently. In some cases, there's 7 different countries, 3 different continents where we have to where the thing gets processed before coming into our shores in Chennai. So it's quite complex. It is turbulent. So one day we'll get better news, the next day we'll get worse news. But the general trend now, as we are seeing, is that there will be step-by-step improvements, not one day enormous improvement over the next few months, but there's going to be small step-by-step improvement in supplies for us. I'm talking about particularly in Royal Enfield. We've also activated over a year ago additional suppliers and other things for different components that we have. So we should be making use of that as well in the coming months. So we do see a better situation in the coming months, but it's still a bit cautious because it's not. I would say for the next many months we're not going to get our peak requirement. So whatever our peak requirement is, that's not going to come yet, but it will be a step-by-step improvement over the, let's say, course of the rest of this year. Hopefully by the end of the year it should be nearly at the right level. Yeah, that's how it is.
Thanks, Siddharth.
Next, we have a question from Kunjan Pratyani. Please go ahead.
Yeah, hi. Thanks, team, for taking my questions, and all the best, Vinod, for pursuing this noble cause. Two questions from my side. Firstly, Kailesh, if you can talk about the kind of cost headwinds we are seeing going into, the next few months, and what kind of price increases we have taken in this fiscal. Is there still a case of under recovery on the cost side? That's my first question. I'll get to second after that.
Sure. I think as of date, including the price actions we have taken in July, Gunjan, it has helped us to protect the gross margin that we have been running at last quarter level to be precise. Going forward, we do see commodity headwinds to continue, but may not be to the extent that what we have seen in the last 2 quarters, Q3 and Q4. So accordingly, we may have to review the situation and take pricing actions as we move to the coming quarters between Q2 to Q4.
So if I get it right, until now we are fully covered up for all the cost inflation we have seen, and from here on we do anticipate further pressures going into the September quarter.
Yeah,
is it possible to give us some quantification of that?
Pretty difficult to predict that, Gunjan, at this point of time. I think you have seen Q3 up to Q3 last year, the inflation was almost nothing, and in December everyone saw almost 80% of the commodity inflation hitting in there. The only thing is that kind of spike we don't envisage. It could be in low single digits at this point of time. We will get into details as we look at the specific quarter.
Okay. My second question is a little bit broader level. When I go through your annual report, you do touch upon a point that, we've seen some decline on the financing side in the industry. Is that, it could be explained by the way we've seen the asset quality deteriorating with the NBFCs and the banking sector. Could you just talk a little bit about it? Is that a real concern for the industry, particularly at a time where we are seeing such a steep product inflation as well?
Difficult to comment it on industry level, but let me restrict it to Royal Enfield. Our penetration post-COVID, which had hit us somewhere around last year Q1, we continue to be around 45 to 47%, which is in the range. So we have not dropped significantly. In terms of asset quality and risks, Royal Enfield is probably one of the lowest in terms of delinquency ratio at the industry level. So we don't see that as a significant challenge for consumer. We are working on ways how can we improve the user experience and customer interface when he goes through financing as he comes to us across models and across other financing opportunities through existing and new banking partners. That's what we are looking at.
Okay, got it. Raghu, can I pitch in one if it's okay?
I would suggest you come back in
Okay,
queue.
sure. No worries.
Next, we have a question from Manoj. Please go ahead. Manoj, can you unmute yourself?
Yeah, hi. Very good evening, and thanks for taking my question. So just would like to understand, maybe we can understand that near-term challenges. But if we have to look from a maybe little mid to long-term perspective, and we have indicated both in terms of new launches as well as the way the export is really shaping up now. So, from a mid to long term perspective, how should we look at the overall growth in the franchise?
Sorry, there was a disturbance. Can you just...
Yes, shall I repeat my question?
Yeah. Yes, please.
Yes. So, Sid, one, obviously, we have seen a very, very strong traction in the export business, and would just like to pick your mind in terms of the way we have spoken in the past, and I think some of the strategies which we have implemented are now obviously giving us the kind of results. So maybe from a little mid to long term perspective, how do we see this export business, and particularly if one would like to focus in terms of your Southeast Asian market and the Latin market?
Yeah. We took a call many years ago that from being an opportunistic exporter, let's say, we want to become a truly global firm and a truly global motorcycle brand. So all of this is emanating from that concept because we truly believe that there's a gap out there in the world of motorcycling in mid-size market, and therefore we strategically set up the infrastructure, as you can say. And for us, the infrastructure was about the right distribution, the right aftermarket support, and we have very strong teams in markets around the world. So we have our own teams across the world. We have very clear plans to become global leader in the mid-size market and to grow the mid-size market the same way as we've done in India. So in India also, we pretty much from scratch, we were able to grow the market to what's nearly, at least pre-COVID was around 1 million level, the size of the market, and growing. So that's really the track we're on. As you can see, the products that we launched have also been with a global perspective. The first truly global product in our portfolio were the twins, which were developed, launched, and the success has been really strong. The Himalayan has also been extremely strong, and now the Meteor, which is, in the old days, people would say, well, the 350 is not really relevant for international markets. It's doing exceptionally well around the world. It's been made with a global market in mind, doing absolutely exceptionally well. It's so we are extremely determined. I mean, our ambition is to be in fact, the first global consumer brand outside of from India, and we're on track towards that. And the results in the last quarter are maybe I would say a good glimpse into what we're